All right, team, welcome back to Verticals. We have a very special holiday episode for you. We are coming to you over the holidays. We hope you're enjoying it. And so we have a little bit of a different format today. Of course, you've got myself and Luke as always, but we're bringing on two partners in crime. My partner at Euclid, Omar. Omar is another longtime VC. And then we've got a familiar face, Todd Saunders, founder, CEO of Broadloom. And we are all going to hit our predictions for 2026. We're going to review our predictions from last year. And, we've got some pretty interesting takes for you, vertical and otherwise. So we hope you enjoy. And Luke, I think the guys are here. Should we let them in?
Let's do it. Here we go.
How you doing today, guys? Are you excited?
Doing great. Yeah, excited for this.
Hope to be here.
All right. Well, Luke, why don't you guide us into a round of predictions here?
All right, let's do it. Good to be here, everybody. Good to see you all as always. And we're going to have a lot of fun today. And it's going to be full of debate and disagreement. Probably not a lot of respectful disagreement, just nasty disagreement. That's our goal. Todd is going to hold no punches. We already know it. All right, so first I want to just kick it off with a little bit of a rapid fire to start us out. And so the first question I'm going to ask the group here is, who were your winners, your vertical AI winners of 2025? Todd, why don't you lead us off?
Yeah, I think I had two winners. I think one is a at least obvious one in my book, although I don't think anyone's given him much credit. First one I'll say is Apple. I'll be the first one to say, like, Siri sucks, still sucks. I don't know what their AI play is, but that's why I think they won. Their lack thereof CapEx spending and following, the other FANG companies on this spending spree has, look at them now. I think they're $3 trillion market cap. I think they're the second highest market cap company out there. And they did that by staying on the sidelines with all the CapEx spending. So, I think they took a contrarian take. I want to call them a winner in this AI race, and where I think this puts them going into whatever it is, 2026 and beyond, is I think they recognize that they have these local inference machines. I think I read they have 1.5 billion iPhones across the world. And that's where they're going to be doing all of their training. I'm sure it'll start lightweight and eventually, go deeper and deeper. But I don't know, their lack thereof spending and sitting on the sidelines in this AI race while knowing in the background they have the infrastructure that no one else already has without spending it, and still being the second highest market cap company out there, I got to make them the winner. So they were my number one. And my quick number two, not a tech company, but the big beautiful bill and their QSBS changes. Forget everything we're talking about here. You are my winner of everything. And thank you for all the startup founders out there. So big, beautiful bill and Apple, two companies.
Todd sold his company this year, so hence his number two.
Yes, I'm very big and beautiful today. So thank you, guys.
It's important you don't forget also the GPs and the LPs of GPs that also benefit from that. So not just founders.
Very right.
The people don't talk about this enough, but NVCA, little known lobbying powerhouse over there, really just sneaking them in.
I love it.
Not to go too than QSBS, but the last time it was in the bill and they were thinking about actually shutting it out completely, getting rid of it. We had agreed to sell the company 3 weeks before, and the paperwork was officially done, 3 weeks after, because there was a tender offer and some stuff. So I spent weeks thinking oh my God, this is going to be Saunders v. United States. And I'm going to be the guy here. It's is it when you signed or is it when the tender offer was done? Because this is baloney. And it was I think in the bill, it was by this date, QSBS, it's no oh, your company was incorporated, a year ago, 2 years ago. It's if you didn't sell by this date, sorry. So anyway.
I'm disappointed we didn't get to see you arguing, making oral arguments in front of the Supreme Court. I think society would have been better off.
There's still time to see Saunders v. U.S. government, so stay tuned.
I wouldn't put it past it. I love it. All right, Nick, who do you got? Vertical AI winner of the year.
Winner of the year, I think I'm going to have to go with maybe a combo of two, a bridge and ambiance. Ambience rather, not ambiance, although that would be a great name too. So if you guys don't know those, they're both, you think of them as healthcare scribes, right? And I think it was a unique case where maybe they did start a little bit, call it solution first, but they ran really fast. I think you saw from both of them, really great partnership strategies. And, there's still some big questions. Like Luke, we talked about, the Abridge Epic thing. But look, I think these are just companies that like were way ahead of the AI trend, way ahead of voice AI, and they've really cemented themselves in like enterprise healthcare systems. So, we'll see what comes, but I think you got to say that in vertical AI, these are winners, man.
This is a little contrarian because even with the Epic news of coming out with a duplicative product, you're still taking them. I like it.
I still take it, man. I mean, I think it's a good sign when you see a biggest player in your space kind of scrambling to copy. So I'd probably bet on them.
All right. I like it. All right. Let's go to Omar, our other VC. We got 2 founders and 2 VCs on the call.
Yeah, I think you guys know why Nick is this haunted house at Euclid after an hour here. So my winner, maybe non-controversially, is I'd say Evenet. So vertical AI for personal injury. When we get to our predictions, I think they nailed the model, right? What sort of this model around selling outcomes, starting at a workflow sort of outside of the system of record. And I think they've done a real good job, obviously, on building around that, selling an outcome, and then expanding and, becoming fairly dominant fairly quickly. So, even up for my pick.
I'm going with Open Evidence. I think Open Evidence is the coolest business. The fact that they created this vertical specific GPT scaled to like 1/2 of the doctors in the United States. Previously, that I don't know, the other scaled players, it took them like a decade plus to even get to some level of double-digit market share. And everybody wrote this vertical off and said doctors are horrible to sell to, and they proved us all wrong. So Open Evidence is my big winner.
Luke, so they have like, I don't know what they market, but it's like 30% or half of all physicians using in the US. Do you think that at the end of 26, what do you think that number is going to be? Because sometimes I do wonder, like, amazing growth, but I mean, is this just, a third-party foundation model slapped on top of, public sector papers?
So they have not monetized yet, right? I think they're up to about half of doctors now. My view is 26 for them is they're focusing on monetization. They're going to do that either via ads, is my guess, or some sort of like enterprise analytics.
Luke, when you say they haven't monetized, like, are we literally? And I don't know enough about the company. You
Zero in revenue. Zero
in revenue. God, that's great.
But they got to half of the doctors in the United States in like 18 months.
I know it just feels like we're having the same conversation we had like 4 years ago in 2021 and whatever year before that I'm having just a little bit of like
PTSD.
PTSD.
I'm usually against the usage strategy, especially in vertical SaaS before getting dollars, but these guys are going to flip the switch and we're going to see $1 billion of ARR next year. I'm getting ahead into predictions, but that's my take.
Okay.
$1 billion of ARR in 1 year.
But you don't have to charge your customers anything. I mean, like, it makes a ton of sense. So.
Yep. Ad spend alone.
I know. I'm like a beaten down PE guy now, so I got to get out of it.
All right. Biggest face palms of 2025.
All right. I'll kick this one off. I'm going to go more thematic on this one. One, I think like companies naming their AI and then referring to it in the third person is one that I am a huge bear on. I know we've got a couple others around this, but like, it's like, hey, this is Cindy. Cindy is our best employee. It's like, all right, man, it's your product. Like, this is, I don't know that I need to be naming my software. So that's one. I'd say the other is, as everyone knows, we've now like been pouring money into the government of Anguilla, which has the .ai domain name. The flip side of that is .ly, Libya, .io, the British Indian territories are just hemorrhaging money. We're not seeing the .lys, we're not seeing the .ios anymore. It's all Anguilla in 26.
That's funny.
All right, Todd, who you got?
Yeah, my biggest loser, I went again with a bigger company or biggest palm face. I'm going with Reddit. Listen, I'm like appalled by the internet nowadays. You go post something on anywhere online, LinkedIn, Twitter, and like, it's like bots talking to bots and you don't know where to turn. But Reddit was like on top of the mountain where they were like, I think they were first to like sell their data. I think it was to OpenAI or one of these guys. And they like kind of struck one of the first deals, and everyone was talking about how they kind of front ran that process and whatever. And now I think they're regretting that deal, number one. And number two, the whole great thing about Reddit is you go on there, you see like anonymous, who knows who this person is kind of conversations. And that's what makes it so great. It's filled with so much trash and bots talking to each other that like I'm paranoid every time I go on there. Like, what am I being algorithmically told by hundreds of bots to do? And I think they're in a tough spot. And I was reading today that I think they're going to try out verification, which essentially just turns them back into like a discussion board. Like it completely kill the whole point of Reddit. So anyway, I am giving the biggest face palm to Reddit. They got to figure something out, because if I want to talk to bots, I'll just pull up ChatGPT and talk to it, I guess.
It's kind of interesting because, like, I feel like how on Google, for a long time, people just append wiki to half of their searches. I feel like I still do this even with ChatGPT. I'll say, like, what does Reddit say if I'm looking for views on a consumer product?
Yeah, but do you think I do that, but do you think that's because of trained behavior over the last multiple years? Like, I don't think that's a new trend going forward. I think it's us people that were...
For the first time ever, I don't know if you guys have actually seen this, where the Google AI search will link to a comment in a Reddit thread. I like incredible precision around that. So, I mean, clearly Google thinks that that's what we are trained to do. So, but your point is valid, right? I mean, it's you need humans to create the content.
Yeah, I think like you're 100% right. I mean, you got to figure out a way, if they can, to tamp down on that. But I don't know. I'm a big Reddit user. I feel like you find certain communities where, like, because all the bots, obviously, they want to just get like karma usage. If you find really specific communities where like there's not really an interest for some foreign government to influence, I think you get some like actual human feedback you can't find elsewhere.
Yeah, listen, I think for the top 1% of Reddit users that want to mine and can see the trends and know what to look for, fine. But like for the everyday Reddit person, it's like going the same way as like Google reviews and Yelp. It's like you just can't. Everything's a 4.5 stars. Yeah.
Exactly. I mean, I don't disagree, but I mean, every now and then I accidentally go to Facebook. I feel like I've entered.
I accidentally go to Facebook.
Like a different universe. It's like the swap verse on Facebook. So I'm not saying Reddit doesn't have problems, but it's internet wide.
I feel the exact opposite of Facebook, funny enough. Well, listen, people log in with their name, like, if it's not them. So like there's some verification that it's a person. And so it's a lot harder just to be like anonymous, automatically like posting stuff, one. And then two, I spend a lot of time in Facebook groups. We could have a whole other episode on Facebook groups, but like our whole business, go to market, like a huge part of it was Facebook groups. And there's some content in there that I don't know where else you're going to find that content. Like there is gold in these groups of flooring retailers talking to flooring retailers that you can't find on Reddit. You can't find anywhere. So bullish on Facebook groups.
I think that's a good call. The main stuff, I don't know. I haven't been able to post for a while because I feel like I might as well just text my parents.
Yeah. The groups. I'm specifically talking about the groups.
I'm pulling us back. Omar, who you got? 2025 facepalm.
Oh man, I completely cut the thread. I'm gonna say, and a little bit pulling off of Nick, your comment about naming AI, Salesforce. I think they're both kind of public launch. Their launch of Agentforce, I think, was one of the most unintentionally hilarious launches kind of ever. Both the branding, the content, the usability. Obviously the stock hasn't done too well. Like I just don't think they have really a coherent AI strategy. I mean, not surprising, but it's the Agentforce launch, the branding. I think all of it just kind of feels very 2005. So they're going to be my loser.
There's a rumor that he's going to rename the company the Agentforce. Have you heard that?
I think it shows exactly what's wrong with that company.
Yeah.
It's like calling it, it's like calling it Mobile Force. I mean, come on.
Yeah.
Move on.
I'll round us out quickly here. So my facepalm is I cannot see another AI roll up for MSPs. Can't see it. I'm sure the VCs agree, but I get like 5 emails a week asking for feedback on a new AI MSP roll up. So stay away. Find an itchy space. Find one that there isn't 5,000 companies and startups going after.
Maybe the loser is reasonable multiples for consolidatable small businesses. That might be a loser in 26.
There you go. All right, so that's segment 1. Good work, everybody. That was our pseudo lightning round. So next segment, we're gonna actually pull up some of our predictions from 2025, and we're gonna show the audience them, talk through what we predicted, and then everybody here is gonna get a kind of roast or provide respectful or disrespectful, if that's a word, feedback on our 2025 predictions. So who wants to take us out first on their 2025? Todd, you want to?
No, Luke, before this call, you said, I'm 20 for 20 the last 2 years, 10 for 10
I've
the last
never
2
been
years.
wrong in my entire life.
Yeah, ever. So I'd like to just look at yours and learn from your wizardry.
All right, so I set myself up for that, Todd. So I will say the last 2 years, and this is probably going to be a blemish for me in my predictions and what happens this year when we actually do a full episode. But I have gone like almost 10 for 10 on predictions for 24 and 25, just to pat myself on the back here a little bit. All right, so my scorecard for you can scroll all the way down. This is 2024. If you want to go back and see how I did, you're more than welcome to. But for 2025, here's what I said. I said IPOs explode, surpassing 2023 and 2024, but not ZERP levels in 21 and 22. Explode, not so much, but we absolutely had a significantly amount more of IPOs in 23 than 24. I think it was almost double. Was it almost double? Anybody know? We had a lot more.
Yeah, low base, but sure.
Okay.
Yeah.
All right. Number 2, I got a little bit of crickets on that one. Number 2, AI startup funding continues to be incredibly strong, significantly outpacing SaaS. That was probably an easy one. That happened.
Easy
Number
one.
3, we see a lot more venture buyout concepts get funded. I'm guessing 30 plus of these get backed by leading funds. I asked my AI. We've seen over 50. Boom. Interest rates drop into the high 5s. That happened. Boom. These might be too easy. Bitcoin hits this one is really good. Bitcoin hits 125K plus and then dips back down to minus 100K.
Did it hit 125?
We saw it hit right below 125. I think it was 120, maybe 115. AI fact checked me, and then it dipped back down to sub 100. What is that right now? It's like 90?
I think it's at 90, but I think it dipped to like 83.
Dipped to 83.
So like, are you right here? I guess you're right. You're
Not quite. I didn't quite hit 125, but the chart pattern was eloquent. All right. And then economy stays consistent with where it is now. Big changes happen in 2026. Still believe that. Think I was relatively on pace there. So I judge myself. These are a little easy, but I think we're probably we're batting at least an A-.
Yeah, I give you directional accuracy on that.
Very solid, I'd say. Not too crazy, but for accuracy,
We'll bring some more heat when we get into it. Don't worry. All right, who's up next?
Nick, you want to do it?
Let's do it. I don't have I don't have anything so kind of well laid out in one list, but I'm gonna pull up the articles in which we made some of these. This is a little bit with you too, Omar, but I'll kind of read them off. So one, we wrote this piece end of last year, Seed Stage Reckoning. Generally, we were talking about, look, seed, and you think that like kind of $3 to $6 million seed range is facing trouble. Like too much capital, high valuations, right? All of which was right. I think the prediction in this one was really that we would see seed valuations moderate because they were just like at all-time highs. And I think this is one I specifically pulled out one where like I don't think we really hit it. I'm not sure we expected even seed valuations to pop up above where they were in like peaks at 22. I do think we were right in conversion rates have still been tough. Seed's still a tough place to play, but certainly didn't see moderation in valuation because it just seems up and to the right from there. Okay. I think next, Luke, you kind of already hit this one, but we talked about the buyout frenzy in vertical SaaS PE getting way more aggressive. I think similar to you, we made some predictions just around that continuing to accelerate. We also made some predictions about seeing more like high multiple exits with sponsors behind them. And I sense that that's true, but a lot of them are not publicly disclosed. So it's kind of hard to say. I don't know if we've seen as many like public stories of like 10 plus multiples.
Todd may have a good case study there.
Yeah, absolutely.
I'll remain quiet on that one.
You're going to plead the fifth
Yeah, the fifth.
into the office, the principal's office?
No, I'm good. I'm taking the third, fourth, and fifth on that one.
Next, so we wrote this piece on the AI first roll up. I think we were pretty early in starting to talk about this. We talk about the pros and the cons. We said we were seeing a lot of them, but our prediction really actually wasn't maybe kind of along your lines, Luke, about like more volume. I think like if you really fully read this piece, what you'll take away is that we have a lot of skepticism around it. And so I think the inherent prediction here was we're going to see a lot of these not really work, at least in the sense of like a venture scale, like venture speed action. I think that one's honestly TBD. And I think probably we got some disagreement here.
Am I the only one on the pod that loves AI rollups for the most part? Todd, I think you do a little bit. Nick and Omar hate them.
I love AI rollups. I don't love how many people think they can do an AI rollup.
Yeah, agreed.
That's it. And like, honestly, it's more so, I just don't know that they're venture scale from the perspective of an early stage venture investor. Like if you're doing it as with more of a PE mindset, I still think it's hard, like you said, Todd, but
We're going to do an episode where we break down how they actually can achieve a venture scale outcome, because there basically has to be, especially if you raise from a PE group, there has to be like significant alignment on being able to hold equity through the year 5 turn. And so I have some interesting case studies like with companies that I've been working with on it, and we'll go deep on it. I'm going to change your mind, Nick.
I'm always open to having the mind changed. Okay, last one I'll point out in our piece, the mind virus of big venture. I'd say like the embedded prediction in this one was like, we're basically calling out this, I'd say somewhat like alarmingly presented narrative that was really popular at this time, about a year ago, that half of all VC firms would die. And look, I mean, that number has come down, and I think another prediction for 26 will continue to come down. But I think this concept that like overnight we were going to see just firms die left and right just hasn't turned out to be the case, right? And like, sure, there are more zombies than ever, but I think you're seeing a lot of people using this as maybe like some self-marketing. And the reality is the venture ecosystem in terms of capital has just continued to grow. And so it's going to prune, but it's not going to go back to what it was in the 80s.
Love a little bit of pruning.
Yeah, I don't know. I think the explosion of like solo funds and people that split off to create new funds, like at some point there's going to be a reckoning here. There's like a bubble of, there's so much good talent. I don't want to name names, but I know a lot of good talent that opened up or started a solo fund, and they're just a total zombie, and they are so much better off like getting back into either the operating seat or what, adding value rather than just kind of treading water and trying to figure it out. So
there were people that raised funds in 21 and 22 that had no business raising funds. Sorry to say it. I'm not going to name names, but I still like,
totally true.
It was insane. It was absolutely insane.
I think we'll see more. I guess it's like a question of what you even consider a venture fund to begin with. But I do think maybe tying this to 26, we're going to see more like not just, hey, I raised $10 million from friends and decided not to continue with it. Like that's kind of a normal in and out venture thing. I think we're going to see more, hey, I raised $100 million and then I didn't raise a fund 2 or fund 3. And I think that's coming in the next like 2 years.
yeah, totally agree with that one.
Can I pivot off Nick, since
Yeah, all you.
we had many of the same predictions, but I there's a prediction embedded in this piece, Nick, that Nick just shared that I think is worth highlighting. So let me so this one, so Nick was just talking about this. I think the part that is another important prediction here that I think has unfortunately come true and gotten worse. Nick talked about funds disappearing, but I think the other part, and we actually wrote a follow-up piece to this, is consolidation, right? Which consolidation being obviously capital aggregation, right? So mega funds getting bigger. I can't remember the exact stat, but what is it? 10 funds have raised half of the venture capital or some sort of ridiculous mark. And I think the downstream effects are obviously hard to know exactly the impact, right? But our view is, two things. Obviously, it's really hard to return $10 billion, right? It's harder to do that than to return $1 billion. But I think the more delirious long-term impact is actually on innovation. And the way that we kind of talked about in this piece, and again, hard to measure, but I think you see it, I think you can see it kind of, at least in terms of the qualitative impact, is aggregating around the consensus, right? So the consensus is, chasing home runs. The consensus is X, Y, and Z. You see this in requests for startups. It's become a consensus business, right? The way to win is to get a deal marked or invested in by a handful of firms. And I think it's just really bad for innovation. I think it's really bad ultimately for the ecosystem, but its capital continues to aggregate. So I think that one, I will say, I think accurate and getting, further down the path. The other, Nick talked about the roll-up one, so I won't touch on one. The other one, and again, I don't know how to grade this one, is we came up with this, I think, almost a year ago, which was trying to define what we see as what does the AI first vertical playbook look like? And obviously not every successful business looks like this. We think most will, and we called it the authoring layer model. Won't go through all of it. I think Even Up is a really good example of it. Abridge is as well, right? You're starting with a sort of outside the system of record, product-led wedge, and then ultimately expanding from there. So again, there are early winners that have fit outside this. We tend to think they may have less defensibility and less kind of ultimate success. So another prediction I think we feel pretty good about. I feel pretty good about.
Two quick comments on that. So I think, have you guys seen that post? I can't remember. We'll link it in the comments, but there's a blog post. I think it was Jeff Lewis did it, and it was awesome. It was just saying how VC has become consensus, but if you actually look at history, like all the massive winners have been totally anti-consensus each year. And it goes all the way back to like Airbnb, Uber, right? All these things like very anti-consensus. So agree with you there. The second piece is, I don't know if you guys have noticed this, but I feel like there's this bifurcation happening where you see seed stage announcements that are like 1 to 5 million. And then you see seed stage announcements that are like 20 to 30 million. And there's like nothing in between that. And it just goes back to your point of like these mega funds, right? And having to put capital to work. But every time I look at like an announcement list or a funding list, it just seems like there's two worlds happening at the seed stage.
There was a post we wrote a while ago about, I can't remember which partner at Andreessen Horowitz said this, that, effectively saying that early stage venture is a fully transparent market, right? That the idea being that price and ultimately, left unsaid, brand are kind of defining characteristics of the winners. And there was a study we linked that kind of showed, if you looked historically, that, there was very little in price differentiation, especially early, between the number one and number two, and I think even number three player in the space early, right? And so there's this idea today that like consensus is right early in a market, and I think historically that's never been true, right? So, we'll see how that plays out, but I think it is a incredibly bold proclamation that is fundamentally really hard to jive with actual empirical data.
All right, Todd, take us home. How'd you do?
I'll try to make it quick here. I know we got a lot to cover. Listen, I'm not a fancy investor like you guys. Luke, you keep saying you're not an investor. I don't know. I put you in that column. So anyway,
Ouch.
No fancy.
Ouch.
Sorry, man. You're both. You're a hybrid. You're this unique. You're a unicorn. There's probably a name for that. But I'm not going to go through all 9. I'll name a few that I thought were interesting. The second one here, buttons are dead. UI, UX is too. Listen, I don't think buttons are dead. When I was writing this, I was thinking about like, I the whole time running Broadloom, never signed into Salesforce. Instead, I had an agent, aka my agent was our director of ops, and I would just ping him and be like, "This is what I want to know. Can you just tell me?" And I had myself just like eerily convinced that like, and I think we're going this direction. I just don't think it's a 2026, 2025, maybe not even 2026 thing. But like, why do I need to know to click reports and then click down and then do this and then do that to find the customer's information? And like, I can't figure it out. At the same time, we ran an ERP that took customers forever to get onto and really forever to get trained on. And I'm sitting there being like, why can't they just like ask this thing to do it for them? Why do they need to know where the buttons are? So buttons are not dead. Are they making their way to be diseased? I think so. I don't know. I think that gets like a half star, maybe no stars. I don't know.
God,
We're
I just
getting
signed you up for. I just signed you up for Asian Force while you were talking. So I was
yeah,
like,
thank you so much. Dude, it's an amazing product. Service business get consolidated, which was right. And I said, but not by MBA grads, which I think I'm wrong. My view is like,
I wish you weren't wrong.
I know. There are these like really, so the first company we bought was a company called Floorforce. John Weller was running it, and shout out to John. And John has like been doing it for 10 years. He was a former flooring guy, started a flooring website business. And I thought that his persona, and there's a lot of these in flooring. Like if you look at the top 8 software companies, 7 of them were previous flooring retailers or in the flooring industry and just happened to stumble upon it. And then you have like 20 or 30 in the flooring industry. I'll call them like coaches or like celebrities that like are launching one-off software for themselves or like have coaching businesses, somehow became like a influencer. It's probably a better word than a celebrity. My view is that these influencers now don't need software engineers, don't need to understand Silicon Valley, don't need to do anything, but they have distribution and people listen to them. So like all of a sudden these guys can roll things up and they're the new like tech founder because they've got access to distribution of companies and whatever. I'm not really sure that happened. I don't think there's like turnkey solutions like that, especially in vertical SaaS just yet, but I am pretty excited about that as a concept. I'm not sure it beat out MBA grad. That'd be almost impossible. This might be actually the most wrong thing now that I go full circle that any of us.
There was a really spicy moment at the conference this year where there were 2 investors that were fighting with each other on stage, and it was awesome. By the way,
physical fighting.
Not physical, verbal, intellectual sparring, as we call it. They were sparring on. Do you only back folks that know the industry? And Todd, I think this is right up your alley. So I'm curious to the VCs, Nick and Omar. What's your take on backing somebody like somebody who knows the industry, comes from the industry, or backing somebody who's an MBA grad or a private equity guy? Or
this is actually a really interesting one. We've been talking about this a lot because I think if you had asked us a couple years ago, we'd probably have a different point of view. But I've actually think that we've seen the like MBA, PE, VC founder do really well over the last year. Like I would peg that as like a winner of 2025. Not to say like, look, by and large, we're backing domain experts, whether that's, out of vertical software companies or sometimes from industry. But I think sometimes you just have people who are, incredibly high horsepower. Maybe they did get that industry depth through an investment or through focusing on that space. And then they just pour themselves into it. And like, it doesn't always work.
The data is roughly split, by the way. I've actually looked at the data on all the successful vertical SaaS companies. And if it's roughly split. It's like, I can't remember if it was 50-50 or like 60-40, but there wasn't a clear consensus.
And do they all have like their right-hand man in the industry? Like when we acquired Floorforce, the guy, John, who was the CEO, like I wanted to call him the chief flooring officer, just like you're the info guy. Like you are our ears to the ground.
I mean, our view on this too is like 10 years ago. And I think it's roughly when you guys started, Todd, like there wasn't vertical software veterans walking around, right? Like there wasn't really a huge ecosystem of talent. And like the reality now is like, I think it is, a decade ago, you wanted someone with, really deep industry experience. I think someone who knows the vertical software playbook to us, or even if it's in an adjacent market, it's just as relevant, right? And I think that's the difference today than, 10 years ago, 12 years ago.
Yeah, that's totally fair.
Can I share a bit of a 26 hot take here? Like, and I think we're going to write a piece on this, but I think what we're seeing right now is somewhat of the professionalization of the founder role in which, like, look, you're not going to go get paid $1 million by Google out of college anymore, but there is a lot of VC money. And so you're seeing a whole lot of people view that as like, hey, this is going to be my career path versus I just happened to have like an epiphany moment and I had to build this company. And like, you could look at that as a positive or a negative, but I think that's why we are seeing more, MBA, like investor types go that route.
Yeah, the stat that I think we published this morning, that was incredible, is 50% of YC founders in the last 2 classes are under 25, which is just an incredible stat.
I mean,
and a good portion of those are actually under 21 as well.
Yeah, my buddy runs a fund called Leap Year, and he was like the COO of Fanatics and high up at DoorDash, and he kind of saw that trend, so he started Leap Year. He's like options trading. He's like giving college kids, I can't remember the numbers, so Hank will have to help me out on this, but $25,000 for like 1% of the company or something, and getting in early. And he's like, here's my biggest thing. Once I give them money, it becomes real. So like, I am what makes their thing real. And usually if it then becomes real, it can turn into something. But my biggest downside here, like 50% of the companies, like they just stop caring about it in like 3 weeks or like 6 weeks. But that's the game that he's playing. But it's really interesting to see because he essentially, these guys are getting to YC like 2 months later or 3 months later, which like was not in his original thesis, but YC is getting younger and younger. It makes me feel so old. I'm like, man, I couldn't imagine I feel like 20 years older than these people. Like,
there's like 3 venture funds or maybe 4 that are just doing Teal Fellowship, like people, alumni or active Teal Fellows. There's a whole ecosystem of funds that just
I think
do
we
that.
got to preempt them, Nick, and start doing ISAs on middle schoolers. Get ahead of that. Get ahead of the
high
pack.
school kids.
Yeah. We gotta find kids once they graduate middle school.
Oh gosh.
oh man,
There's some labor laws there you probably gotta watch out for.
Well, I think if you can do it in basketball, right? You can do it in
Just call it NIL money. You'll be fine.
Yeah. We're sponsoring you for vertical software.
All right, that's our wrap. I think all pretty relatively well. We'll grade each other at the end of 26, and we'll have kind of a clear list, and we'll see how we did. But good first pass. Some winners and some losers there. All right, so kind of our final chapter here of the pod. We've got 10 questions that I sent out to these guys ahead of time around their 2026 predictions. So our first prediction, biggest vertical AI winner of 2026. It can be a company, it can be a sector, or it can be a theme or some combination. I'll go to Omar first.
Euclid portfolio, obviously. Beyond that,
Omar's mustache.
Yeah. My facial hair. Let's see. I'm going to stick with my initial answer. Even up in kind of the even up model.
I'll follow it up. Maybe no surprise, given my earlier predictions, but I think clinical healthcare. So not even necessarily big health systems, right? But anywhere you've got 5,000 plus practitioners, I think the opportunity is absolutely unbounded, even with everything we've seen. And a lot of the big names so far have been focused up markets. So I think that's going to be a big winner, not just for venture fundraising, for returns, for exits, but hopefully for economic and lifestyle impact. So I'm a big bull on that one.
I'll go a little different direction. I think industry wide, I'm really interested in GovTech. I think it's hit a breaking point. I think say what you want about the current politics and administration. I think there's all these people joining, helping build better software for the government on a national level. And I just think this next, consumers being residents or citizens, whatever you look at it, I'll talk about local government here for a second. Residents expect good websites and a good piece of software. Well, we didn't get that. Now there's AI that it's going to force us at least to get to the next level. Maybe not all the way to kind of AI focused software, but man, it's we're ready for it. GovTech software is ready for a little bit of a shakeup.
You think it can happen though with the go-to-market nature that, shout out Zach Bookman at OpenGov, I think he sold for almost $2 billion to Cox. It was a 15-year plus run, but it's just such a brutal place to sell into. You still think that clears the way with AI this year.
Yeah, but listen, like you say that, but if you were to ask any investor and look at like what's the most important metric, I think a lot of people will look at retention as like the key metric, just as much as kind of velocity and growth. And like from a retention standpoint, there's probably not a better industry. So like, I don't know if you have patience, I think there is. And I just think demand from the consumer citizen side of things is so disjointed from where we're at today. Like we're another leap further that it's inevitable. Like it has to happen. So yeah, I'm excited and bullish that can, hopefully make all of our lives better.
I'd love to see it. All right. My vertical AI winner of 2026 is going to be GCAI. So I love GCAI. I think it's a killer company. We've seen the growth with like Harvey and whatnot, but I don't think the usage is as strong as, as it can be in a general counsel role inside of a company. And so I just love the approach of selling specifically into GCs at businesses and not law firms. It makes a ton of sense to me. I think this company can be bigger and better than the folks going after just like law firms. I think it makes a lot more sense inside for in-house counsel. And so, they went 0 to 10 million, 25. I could see these guys going 10 to 100 next year.
I think like the corporate focused, I think like what's been interesting to watch is that just Harvey came out, I think kind of primed everyone to think that legal tech was whatever sells into the top 100, law firms. I think stories like GC have been really interesting to show that there's like a whole lot more surface area to legal tech.
Yeah, totally fair.
All right, next up, biggest vertical AI loser for this year, for 2026. What do you got, Todd?
I will take Service Titan. I know a lot of people there, so like I'm sorry that I'm going this direction. Listen, I just think that product has so much margin and pricing pressure on it, and they took the direction of like, okay, in their industries, HVAC, plumbing, whatever else, they're getting rolled up. So they went up market. If you look at their product, it's like more complicated than ever. They went up market and they started to focus on where the money is. Totally fair. And they're now focused on these like bigger roll-ups. But now it's like every day I see a new HVAC. There must be 1,000 HVAC softwares, and they're putting extreme pricing pressure on Service Titan, and they're all a lot easier to use. So I'm going to put Service Titan as my biggest loser, where they used to be the like sexy, easy to use product, and that was like their whole thing. And now they're like agent force of, vertical software here.
That's an interesting one. I do think it's an interesting example of how like when they started, it was considered a very focused vertical. I think now it's like, it feels to me like they span a bunch of verticals.
Yeah, and you have that top tier, which like Jobber, Service Titan, whatever.
House Call Pro. And they just like fight over the top, but I'm just worried that they're getting ankle bitten by the thousands and thousands of other super vertical, super inexpensive products all around them. I don't know.
I think that, listen, I was going to have it as my public stock pick. So obviously I disagree. I think that like there's two kind of conflate or two, like there's two challenges I think facing Service Titan. I think you mentioned competition on the flip side. It's like, they're probably 8% of the market. Like they're so underpenetrated. And I think, use like the Toast comparison and there's obviously going to be underpricing. They have to execute and win on product. And I think that has been a limitation. I think the other thing that Nick alluded to is true, which is like, there's very little in similarity between a large HVAC trade and a large roofing trade, right? And so that's been their limitation, right? Is like, how do you expand without expanding? And I think that it's going to have to bar some people. They have to get really acquisitive or they're going to be in trouble. But
so where do you think they go from here? You think the growth is all organic, not organic, but it's all within the current trades they're in? Or you think this product expands and grows?
I think they have to do two things. Listen, and I've been, shout out to our Service Titan listeners. I think they need to buy in additional verticals. So like go into roofing, go into Tetra, and just need to buy separate products. I think secondarily need to buy add-on products. So I keep mentioning Rilla, but like there's a bunch of adjacent kind of extension products that make a ton of sense. And they just haven't been as aggressive as they should be. I don't know why, but maybe it's a company culture thing, but Toast was incredibly aggressive, a bunch of different, trying things, buying things, failing at trying things. And they need to do that. I don't know why they haven't, but that, so I don't disagree. I just think that time frame is a little bit longer before I would start to worry.
Yeah, it's just funny. We had the earlier conversation of like, are these roll-ups sticky? Are they going to stay around, these roll-ups? Are they going to go kind of boom or bust here? And it's like their customer is the roll-up. So like if you don't believe that the roll-ups are happening, it's hard to believe that their core customer is here for the long term. I don't know. It's like you start by saying I have domain knowledge of a product, and they're so horizontal now and so complicated that like, man.
And by the way, House Call Pro killed it, absolutely killed it, focusing on the SMB, which was so hard to do. Like those guys went up in market enterprise, and House Call Pro has like executed in silence. They've been like the ugly stepchild to Service Titan. And I've heard crazy numbers and crazy growth.
I would love to
from
be
that
that
company. Yeah.
Yeah.
All right. I like it. Who's next? Did everybody go on that one except me?
No, I think I just shot it out and Omar told me I was wrong. So
I told you I slightly disagree.
yeah.
Luke, you want to jump in?
Yeah, I'll go quick here. So mine is, I think we're going to see a few other like very clear case studies around point solutions getting taken out by system of record. We haven't really seen a lot of examples yet in the kind of AI native landscape. I think a lot of AI native companies are playing with fire there, similar to like the Abridge Epic thing. And I think we're going to see some lockdowns, some shutdowns, and a lot of these AI native companies are going to be worthless if they don't have access to the data layer. So that's my flame out is point solutions that don't evolve fast enough into system of record layer, AI native point solutions.
I think that is a good one, in line with your continuing accuracy. I think I kind of struggle with this one, but I'm going to go. I feel like I had a more obvious one and a more, I don't know, maybe more controversial one. Let's go with the latter first. Deep tech. Like, I still don't really understand what that means. And like, I do think that there are categories within deep tech that have like huge potential. So for one, I'm going to carve out biotech, which I think has always kind of been its own world in the venture startup landscape. I'm actually like very long-term bullish there. But I feel like at least in the venture world, deep tech has become this catch-all for we're just gonna invest in these like really hard, uncertain categories that have completely diverse business models that just eat up capital like no other. And I don't really get it, to be honest. And like, look, I may get proven wrong by continuing government subsidies, but I think there's a reason why software and AI, which is software, does so well, at least from a venture perspective, right? Low marginal cost of growth. So I think we're going to see a bit of a pullback from that. Somewhat related, I think a little bit less controversial, climate tech. Look, I think there's still huge endemic generational trends that are real here, right? Like solar adoption, storage, etc. And like very bullish on those. But I think both of these categories, I mean, one, climate is obviously, speaking back to the triple B, got hit really hard with a lot of the, ITC pullbacks. But I think these are both categories also where there's just like in 21, a huge wave of capital that went out behind these categories without a whole lot of thinking of like how much liquidity is there in a 5 to 10 year time scale. So I'm going to go with that.
Obvious.
The climate is obvious, but I mean, come on, deep tech, that's no responses on that one. Okay.
I agree.
I was nodding in approval.
Those are so clearly like so hard.
I'm preaching to the choir.
Every time I hear deep tech, I'm like, I'm not smart enough for this one. Oh my god, my brain's gonna hurt.
All right, I'll quickly add on mine, which so I think the first one I'll go with is what I call sort of copycat vertical AI. So like 2 years ago, it was Copilot for X, Y, or Z. Trying to kind of the top down enterprise knowledge. I think the last 18 months we've seen Scribe or Note Taker for X, Y, or Z, right? Just replicated over and over again. I think more recently we've seen like Receptionist for X, Y, and Z. Like, look at any of the accelerators and look down the company list, you'll see probably those three repeated over and over again. We have a piece that came out today talking a little bit about this. Like it may work with, with enough capital and enough branding, and, you might get some traction, but we just don't think those are durable businesses. The second one I'll say, and, or maybe repeating this frequently, is roll-ups. And the reason I say that is, I think the idea of a roll-up fundamentally, right, is one of financial engineering, right? You buy assets, you put them together, you do some magic to make them more valuable. And obviously the more capital that goes into a strategy, the higher the asset price is, that margin, that delta gets shrunk. And so, it's obviously, still a drop in the bucket relative to PE dollars, right? But I think, again, the more money that starts chasing these assets, obviously the less performant the asset does.
Yeah. Those are both spot on. I want to say that I disagree with either of those, but
Guys, we're not doing a good job disagreeing here. We need more controversy.
I disagree with the roll-up take. Like, I think if they are structured appropriately and engineered appropriately, I think the roll-ups can't have venture scale dynamics. I think the problem is you have this like wave, and I had a call today where, people are just starting with AI roll-up and working like backwards from that, or they're starting with vertical AI product and working backwards. And I mean, Todd talks about this all the time. Like, you can't start with that. You start with like a problem. You start with the customer, and then you find the best vehicle. And I think AI rollups make sense when there's a significant like software graveyard. Like, it's proven time and time again that you just can't penetrate this market with software. And the way to overcome that is to buy the underlying asset. And ideally you get all the PE financial arbitrage stuff you're talking about. But if you structure it the right way, you're actually bringing in like a net new product that was unable to get adoption via a SaaS go-to-market motion. And now you have something like really interesting. So
I'm with you on the roll-ups. I'm not sure I'm with on the VC outcome roll-up part of this. It's a lot more capital intensive. And listen, there's some industries I think it could work. I think we've talked about a few of them, but like on the most part, I think you could be great businesses and great exits. Can it be venture scale?
Todd, here's a good example. Did you guys see the news on Newfront yesterday? Newfront Insurance, OG, AI rollup, before AI rollup was even a thing. Founders Fund backed them, I don't know, like 8 or 9 years ago. They raised $250 million. They just sold for $1.3 billion yesterday. And create venture scale returns for everybody.
You think, do we, is it though? Do we know?
They sold at 18x EBITDA. Yeah. They raised 200 to 300 million. Seed stage investors got in 8 or 9 years ago at what? 25, 50, max 100. Like, we're talking double digit, MOIC.
Yeah, fair. I guess it's when they raise that. Go ahead.
Was that a roll up in the traditional sense?
They bought, I think they did a bunch of de novo stuff, but they bought a bunch of stuff too.
Yeah, no, that's fair.
We need a whole separate AI roll-up episode. It feels like we could go deep here.
All right.
Next time.
Who's up? Did we go through everyone on that one?
Yeah, we did.
Yeah.
All right. Next question. Who fastest path to 100 million plus of ARR, whether it's a wedge product of specific vertical? What's your guys' take here?
I have an easy out answer. I just go quick because mine's a quick one. If I knew, I wouldn't be talking to you guys. So I'd be able to do that. So like investors, I'm going to sit here and I'm going to listen to this and let me know, because I think about that like every single day. I don't have a good answer. I really don't. It's a confusing one. So I'm just a student here.
All right. If you do have the answer, please do let Omar and I know.
Yeah. We're here to help.
So I'm gonna go with retail, and I see two angles that I think could be interesting. For one, I think obviously I don't know the form factor either, but I do think considering what LLMs have unlocked and what they're good at, considering how big the kind of fragmented retail market is, considering what we saw with Fair, these things can scale really quickly. I do think there's an opportunity, whether it's around procurement, whether it's around communicating in a different way with customers, but I think you could see something scale, or could even be like replacing parts of what Spotify does, like maybe merging Lovable and Spotify somehow. But I could definitely see like 0 to 100 million ARR business popping up in retail in 26.
Okay, I'm gonna go start that one.
Yeah, we got your term sheet ready.
I mean, I'm a big fan of industry-specific GPTs. Like, I think the open evidence model can lend to that type of growth. I kind of did a little bit of a cop-out here. So Veeva, everybody knows Veeva, right? Like darling of vertical software. Focus on life sciences, ex-Salesforce guy. I think they like literally white labeled Salesforce when they started. They actually finally launched AI agents in 2025. December, it says, I just pulled it up, December 3rd, 2025, they launched Veeva AI agents, a suite of industry-specific agentic AI tools deeply embedded into their platform. I think this will, I think the vertical specifically is very strong for agentic workflow opportunities. And so I think this one will go 0 to, it's a little bit cheating because of the cross-sell dynamic and the scale they already have, but I think they'll go hundreds of millions of ARR added to their revenue base next year with it.
So you're buying the stock left and right, or what?
Yeah, I am. I think they took their time. I think Gassner is like incredible CEO, and they didn't rush into this. And I think they did the opposite of Agentforce per Omar's earlier comment.
All right, Omar, what do you got?
Our collective portfolio is so far is long Apple, long Veeva, short Salesforce. That's what we're recommending.
Short ServiceTitan.
This is not investment advice. Consult.
I'm gonna have a bit of a cop out too, which is like I think my more idea than company, which is I think the even up model, right? So the model of delivering sort of an outcome based service that's good enough. Today it's largely document. I think the next vertical AI sort of archetype will be more multimodal in nature, right? So document, obviously text, voice, image, and I think we're pretty close to getting there. I think that company will be started in 2026, and I hope if you're listening to this, you come to Nick and I first.
I think that's actually a really good one. I had that partially in one of my answers to come, but you took it over. Like, I feel like this happens again and again in AI, where, I mean, everyone is focused on what LLMs can do right now. I feel like a lot of people have forgotten about vision. But I think, we're primed for it. So great job, Omar.
Anti-consensus.
Thank you, Nick. Thank you.
Old Guard. We moving to that one?
Yeah, Old Guard, vertical SaaS company, most likely to get disrupted or acquired in 2026.
I'll start with. I think this is unfortunately a layup here. I'm going to say C3. They qualify. I think they've already gotten battered, but I think they're going to continue to get battered.
Tell our listeners who C3 is.
C3 is an industrial software business that tried to relabel themselves as a AI first business about 18 months ago. Had a wonderful run in the AI hype and has been unfortunately unable to deliver growth, performance, or anything relating to kind of product. So a bit of more of a stock and branding issue. But if you look at their numbers, poor retention, they have super high customer concentration in like utilities, I think is the big category. And so they're going to get unbundled very, very, very quickly.
Right, they call it.
The CMO is getting fired. He had a great idea. Product didn't fall.
I think they actually went from C3.ai. They got the domain name.
Great domain.
That's all you need to do to rebrand.
Yeah, and I would actually argue the CMO maybe gets raised and the chief product officer gets demoted. Who knows? Although I don't even know these people. I don't.
You can only polish a turd so many ways, right, Todd?
Yeah, exactly. I'll do mine real quick. Mine is, again, a layup, but like DocuSign, I look at that business and I just do not understand what is going on there, why they need that many people. Like there's now so many of these that are free. I know they maybe offer a little bit more compliance and some integration work, but like that's all going away. I wrote something earlier where like they are a great acquisition. They need to get battered some more, which they think we all know they're going to. And I think they become a great acquisition target. I think like DocuSign something is like just a noun. And I think that's valuable. And I think there's some weight there that other things don't have. But that product has I haven't looked at their market cap here in a while, but like
What's the head count too? Look at their head count. It's like 3,000 or something. It's crazy.
they do DocuSign market cap. Yeah, it's just there are so many alternatives out there today. It is unbelievable that let's see, year to date they're down 21%. I guess not too bad. Could be way worse. Where do I have there? Man, this AI browser thing that you just had me down at the beginning of this is not helping me, my man.
Short AI browsers.
Oh my God.
Let's go long Google, guys.
14 billion. So
Yeah, and they're doing what, 3.5 billion of ARR, right?
yeah, I think it's like 2.8 or something, but yeah. But come on, like when's the last time any of us, we sign documents all the time. Does anyone here use DocuSign recently?
I mean, I'm embarrassed to say I still
used it
use
yesterday.
DocuSign.
you
I
DocuSign
think we-
something?
It's free. I mean, I don't use it enough.
I think we actually have a paid subscription, Nick. I hate to tell you. Okay, in all seriousness, I tried to figure out. I spent about an hour 2 days ago trying to figure out how to use the Google Sign feature, and it literally didn't work. Like I know there's a lot of free tools, but for some reason the Google Sign one, if you're listening, it cannot figure out how to add a signature and send it inside of a Google Doc.
I'll go next year. I got Blackbaud. So Blackbaud closed a couple days ago at $63. Market cap three billion. It's only growing 5%. It's like the definition of bloated and legacy. I think it's going to get taken out by Vista or a big PE fund and take it private this year. It's like long overdue. Can't believe it actually didn't happen this year. So that's my 2026 pick.
I'm actually amazed they're still public. They're still public. To your point, I thought they'd gotten bought a while ago.
Didn't they merge with someone?
So public.
Oh,
Still there.
Didn't they buy Pluralsight, or am I misremembering?
They bought their main competitor, which I can't remember what it was, but
There's so many good like modern upstarts, even like growth stage players that service nonprofits. It like blows my mind that they're still like chugging along.
yeah, 100%.
When I was an investment banker about 20 years ago, the first company I ever worked on was a company called Convio. I think got eventually bought by them in the nonprofit space. So it's been a market for a while.
There you go. Small shareholder, getting some liquidity 20 years later.
Yeah.
I think
That's
on mine it was kind of hard to pick, but I think I would go with Power School. You know, they're late in the cycle and not public, but recently taken out by Vista. I just think that they're kind of sitting at this like lightly defensible system of record layer for schools. You're seeing Magic School, School AI, et cetera, like not go after it just yet. But without knowing too much about it, I feel like it's an eventuality that we're going to see more education AI and like people are going to start going after them. So I feel like it's not an easy distribution problem to solve, but
Luke, I'm sure you have some insight on that one.
I don't comment on education.
Yeah, Jack, I was going to say no
Software.
comment.
All right. 2026 IPO that will print money for retail. I'm going with Anduril. I think Anduril goes out next year. DoD budget's ballooning to 179 billion in R&D, and they've got multiple billion earmarked for AI autonomy. Anduril is like, a prime candidate. I think they go out, and it's a good. They got to go out. I think with this administration, and I think 26, if not 26, for sure 27.
Yeah, that's a good one. And that's listen. The defense tech is hot, so I could see that going quickly. And I guess my question about Anduril, and like, I'm curious to see. There's been so many of these like secondaries and like layered on SPVs. I'm interested to see like the unwinding of all of that and where that actually ends up for everyone. Nothing. It could still be a good company. No idea. But
It's so funny seeing the Twitter beef on SPV of SPV of SPVs.
yeah, it's crazy. I'll do mine real quick. Again, no idea if they're going to go public or Google do this, but I think a Waymo spin out is on the horizon here. I think Google just takes their medicine. It's now like a behemoth of a standalone company. Google has now figured out their AI play that I don't think they necessarily need to kind of sit behind Waymo. You look at the usage numbers of these like autonomous vehicles in California and Austin, whatever, Texas, it's out of control. Like the fact that we still, the fact that we still think like there's going to be people driving cars around is just, especially when it comes like Ubers and taxis and transportation. Like I just don't think it's there.
I feel like the tech's already there. Like, why can we just get to
regulation?
Deployment?
It's
I
regulation.
know.
And I feel like Google held on to Waymo for a long time, although like pre-breaking themselves up is probably the right idea. It's a big enough company. I think my hot take is like they waited to make sure they could get through this AI thing with Gemini and make sure they don't like eat their own business, which now I think they have a clear path to who they are, that they can step out from behind Waymo and let it go have its own wings. And I think for retail, like retail loves things that they use. And the first time you get into one of those Waymos, you're like, this is sick. How do I buy this stock? And even though the thing's been around forever. So I think it's going to be eaten up. Retail's going to love it. And they could do very well.
Good one.
Yeah, it's a great one. And one you can get in on right now. Just buy a little Google stock.
Yeah, exactly.
Yeah. It's an interesting one too, because I feel like a lot of the country has not had that experience. And I'm sorry to say this, Uber and Lyft, but like pending pricing, once you go Waymo, I mean, you don't really go back.
Yeah, listen, my opposite of Waymo is like, I know those cars are super expensive, and like, how do you do that at scale? Like, I have a Tesla, and I autopilot like 90% of the time, and I actually like driving, but I also like, it's like driving that's less stressful.
You
can't go back. So I'm sitting here thinking, like, is Elon just like again, like just doing this to us, where we all have Teslas? Mine's sitting in the garage 90% of the time. Like, can I just have it go gig work for me? And like for 30 grand, my car's 30 grand. Not think those Waymos they said are like 150,000 or something crazy to outfit it. He already has millions of $30,000 cars out there that aren't being used 90% of the time. Like, that's a interesting, compelling case against Waymo. But
I think he needs to prove that he can do it reliably without LiDAR, little cones on top. I think that's like some of the controversy, but he claims in 3 weeks we're going to have autonomous Waymos, I think in Austin, right? You made that claim this week.
I'm going to be able to summon Todd's car to California.
no problem.
I think that leaves me. I'm going to go with Canva. I think it's a really strong business, great management, hasn't overraised for where it is in this market. I think it's well positioned to keep doing what it's doing. I think also they could like go deeper into Photoshop, Figma territory, but I mean, I think they've just proven time and time again that they know how to expand, and they've leaned in super like AI forward.
I feel like they miss. I love Canva. I'm actually a big user of it. I think they miss the AI boat though. The AI in Canva is not good.
I agree, but I feel like it's one where there's no one else I would consider using for their purposes, and so I feel like they have a little time to catch up. So like pending if they get their shit together on AI, I don't know that it would be like it might not be like a Wall Street Bets money printer like Anduril could be, but I think it's going to be a really solid buy, depending on where it prices.
Yeah, my really boring take, and obviously they probably aren't going to go public, was going to be either Canva or Stripe for obvious reasons. So maybe they go public, doubtful, but if they do, I think they would do well.
Yeah, Stripe has said multiple, like, why should we go public? And it's like, yeah, okay.
So my prediction is right, Todd. Come on.
Yeah, I'll give you that one.
All right, I'm going to skip the next one, and I'm going to go right to the we didn't see this coming trend, under the radar vertical or application. And I'm going to start with the rise of sub verticals. So we're going to see over 50 pre-seed and seed fundings get announced for vertical AI or vertical software companies focused on sub verticals. So an example of this is like Slice for pizza, right? Not restaurants, but for pizza shops. A lot of opportunities there in homes, like field services, home services broadly. I think too many founders have like looked at industries and not sliced them up. Get it? Like that.
Yeah, gotcha.
Oh,
Gotcha on that one.
nailed it. Isn't this like an ongoing, for all of us vertical nerds over here, isn't this a bit of an ongoing, like, inevitable trend though?
Yeah, but I think my core prediction that I'm saying is we're going to see 50 plus pre-seed seed deals get done.
Okay. Yeah. I like that one. I'll lob in here. I think I'm really interested in world models. So I don't know if you guys have followed this, but large language models focused on obviously natural language, understanding what they should say next. They don't really inherently have context on whether what they say, like why it might be right based on how the world works, right? Reasons why they can't really make any sort of kind of novel predictions around physics or medicine or engineering, right? I think that what we're going to need in terms of like full AGI eventually is also similar foundation models for how the world works in certain verticals, right? So I don't know that we're yet going to see like the big winner, but I do think by the end of the year, there's going to be a lot more universal familiarity with like the emerging world models. Because I think today most people couldn't even, name the top handful.
Yeah.
Interesting.
I definitely couldn't name the top handful. So
Yeah.
That's above my pay grade.
yeah, mine is, man, I went like very, very specific here. I'm not sure why, but mine is, I wrote church software. I'm going to call it religion software. Listen, I think there's like I saw something, there's like 350,000 churches in the US, like a massive TAM, tons of money being pumped through it. I think like PSG, Luke had a pretty good company. I can't remember the name of the company, but like a church software company that was like
Ministry Brands.
Yeah, Ministry Brands, which like the amount of donations and payment processing in there is like unbelievable. The reason I'm pretty bullish on this space is I think there's been in at least North America, been a decline in the US, a decline in like Catholicism and like people starting to look at different ways of having meaning. And I think the rise of other types of religions and people having meaning with each other, whatever that really means when it comes to a church. I just see that as like a massive TAM, a total industry that's being disrupted and totally changed. And there is so much money in the donation side of it. And just I don't think people appreciate the operational side of how much work goes in to keep these things going between the programming and everything. Anyway, that's my like industry is being disrupted. So probably a pretty big opportunity there growing.
The Catholic Church buys character.ai.
Yeah, exactly.
I'd be a lot more likely to admit my sins to, Katy Perry AI.
Are you thinking about a roll-up strategy here? Can we combine denominations?
Absolutely.
I'm going to roll up religions. Oh, gosh.
New religion.
I don't think our listeners were ready for that one.
All right. Mine, I don't think is controversial. Well, maybe it's controversial. I think there's going to be a what I call ARR churn apocalypse. There's going to be a lot of very well-known names that grew incredibly quickly where like people are going to finally notice that you can't grow your way out of a bucket without a bottom. Growth retention does matter, unfortunately. And I think that is going to be true across both vertical and non-vertical AI. That churn is a silent, well, shouldn't be a silent killer, but it's a silent killer of a lot of very fast growing, high profile names.
100%. I think it's a great call out. I don't even think we still know like what should retention rates even be for these companies.
Do you think that's because there's so many options out there? I mean, like I agree, but is it because there's so many options out there, or is it because like people are just building internally? Like where is the money going?
I think there really depends on there's two things. One, I think you're still in looking at enterprise. I think you're still in the experimental budget phase with a lot of these things, right? And so like a lot of people are trying and not buying, but trying can still mean a multi-million-dollar deal, right? And I think that's both vertical and non-vertical. I think the other thing on the lower end is like it's really effing easy to try something and use it and switch, right? And so the low switching cost sort of prosumery stuff, like by definitionally, doesn't really have a moat, right? And so I just think those things are, like the things that go zero to a couple $100 million of ARR, it's great, but it also probably means there's something foundational that it is is difficult to build a moat around. So it's not universally true, but I think it's something we'll see in 2026.
All right. So let's round us out here. Final question. And it's going to be a two-parter. So part one is you have to pick a number, the number of billion-dollar vertical AI companies. So vertical AI companies that get unicorn crowns. For context, there were 43. There were 35 from my AI research. Listeners, correct me if I'm wrong, but I had 35 vertical AI unicorns that got crowned in 2025. You have to pick a number for 2026, and then dark horse prediction, wild card prediction. It can be on any topic, anything you want.
All right, I'll go first. I'll say my predictions for billion dollar vertical AI companies. So going from 40 or whatever to 100. So I don't know, almost tripling. And then my dark horse prediction is Nick will follow me to the dark side and grow a mustache.
I don't know if you've seen the single picture that exists of me with a mustache, but my wife has, and
The internet demands it.
if
Nick.
you want
I'm sorry.
controversy,
You'll have to apologize to your lovely wife.
He won't have a wife if he does it.
she said I looked like Super Mario. Is that good? Is that bad?
No one does.
You're Southern European, so
But that's true. That's true. You can be my Luigi. All right, I got to think on that. Todd, can you?
Yeah, I mean, listen, the number is an interesting, like, I'll take 101 because then I can take everything above what Omar did. That'll be my answer. So like if we're playing closest
It's
to,
so
like, we have
petty, I love
fortune. Yeah, it's like, my dark horse prediction, and I don't know what dark horse is. I just try to pick something that I think randomly could happen. I think HubSpot buys Day AI, if you guys know that kind of upstart CRM. It was started by Chris O'Donnell. I think he was the chief product officer at HubSpot. HubSpot's done not great in the markets. I'm not sure they have a clear. I know they've launched a lot of AI products. I don't think anything is stuck, and it's been clear that they've now become like an AI leader. I think they see what's happening to Salesforce. They're an innovative company, a product first company. I think when you have a hot CRM that's AI first sitting on the market where your chief product officer is the founder, your former chief product officer, you can bring them back to kind of lead you back to glory. It's like a great, well-rounded founder story along with, bringing AI back to HubSpot. So HubSpot acquiring Day AI is my hot take for next year.
It's a good one. Nick, you want to go or you want me to go?
Go for it.
All right. I have one. Okay. So my number, I'm going with 72 vertical AI unicorns. I'm not doing the petty take like Todd. And and then I've got one prediction that's vertical focus and one that's not. So my prediction is a small AI market correction, no bubble burst, small correction, a little bit of taking medicine, but not substantially. So I think funding wise, valuation wise, it's kind of where it is, maybe 10 to 20% either direction, but no crazy fall off or acceleration. And the rationale there is I think Trump gets his interest rates down with Powell going out. I think usage is incredibly strong, which is different than other bubbles. I think capabilities on the technology front continue to grow. We've seen crazy acceleration just this year on AI capabilities. I never would have thought I could spit out a beautiful PowerPoint with AI, and this year was the year I was able to do that. Okay, and then my last one that's totally irrelevant to vertical software, but Florida is going to see another crazy boom of influx. And no, I'm not Keith Rabois, but the reason why property tax gets pushed, note property tax or some variation of that, whether it's first-time home buyers or first-time home buyers plus seniors, gets passed in November. I asked AI what the likelihood of this was a year ago. It said it was like a 5% chance. I asked it before our pod. It said it was a 40% chance.
You don't think tax comes from somewhere else? Like, is this just a naming convention where tax comes from thing, though? I mean,
yeah. So I went deep on this. So basically, if he does just homestead properties, which is primary residence, it's like I think he's got like $36 billion or something in that range, like 30 to 40 billion that he has to find elsewhere so that the schools still get funding, local communities, blah, blah, blah. If he jumps the tourism tax by like 1 or 2%, he covers the bill there.
Oh,
And I don't think people are going to stop coming to Florida because there's a 2% increase when they check into a hotel. Just me.
Yeah. Okay. I like that. It sounds like you're
Big
trying to
one.
really pump up your real estate there, Luke.
I don't think I have that kind of influence, Todd, but we'll give it a go.
all right. So I think numbers like Luke, I do like your number. I mean, I think I'm like more bullish in general for unicorn creation in 26. I think we'll get back, I don't know, I would guess like 150, 160 unicorns overall. So yeah, I think 65, 70. I'll go on the conservative. I'll be on the conservative side of this. But obviously I'm still betting this is like doubling minimum. Because vertical is representing more than ever. And then so our final element is what? Just like general prediction or deal prediction?
Go crazy, go nuts.
take.
Any prediction,
Dark
any hot
horse
take.
prediction. Wild card.
I think, my dark horse prediction is that the federal government launches the equivalent of a cryptocurrency and Bitcoin surpasses 150,000.
We can hold from your mouth to God's ears, please. Well, I mean, you have Luke, the king of guessing where. Luke, we got to get your opinion on Bitcoin because you claim to have called the 125 to 90. So you're 10 for 10 guy. Is that okay with you? 150?
I can't pretend to know a lot about cryptocurrency. I mean, I have a good amount of it, but I think I don't know. I think interest rate pumps. I think we'll see 10 to 20% lift, but not much more.
I think we're just seeing there's like structural, look, whether or not you do or don't like current administration, they're structurally very friendly to it. And a lot of their initiatives still actually haven't come to fruition yet. So I think just in terms of like making it easier for people to invest, look, we just saw first major traditional payment platform and MasterCard, start accepting them. Like at some point, I do think we'll hit a just like usage and mind share, trigger that will drive a 50% bump.
Dude, the headline tomorrow, Euclid partner calls 70% 1 year increase in Bitcoin, man. It's gonna be cover of the Financial Times.
Oh, I didn't tell you we're a crypto fund now. So
I mean,
All right, guys.
all
why
right.
not?
Well, thanks for being here. Thanks for a beautiful episode. This one was a lot of fun, and we're gonna make it an annual thing if this group is up for that. So we'll check back this time next year and see how we did. What does the winner get? Does the loser have to grow an Omar mustache, or what are we doing?
I think we're trading either some equity or some carrying funds. I don't know. We're trying to put something real in line here.
They lose their QSPS.
Oh, God.
All right, thanks for having us.
All right,
Yeah,
guys.
thanks, guys.
All right.
Thanks.
All right,
see ya.
Yes. All right, everyone. That is a wrap for today's episode. We've got some spicy takes there, some not so spicy takes. We're going to see how we did. Hopefully better than last year. Almost certainly half of them will be wrong, but it was a whole lot of fun. Hope you guys enjoyed it. As always, a big end of year shout out to Paraffin. We are, coming up on a couple months into verticals so far, and just a great reminder of the partner that makes it happen. If you're a vertical software founder out there, you should check out Paraffin. If you aren't familiar with them, they're really the leader in embedded finance. So think, you have customers that have customers, ways to extend them, credit, really just ways to expand your TAM, your retention, right? They work with hundreds of vertical software founders. So thank you to Paraffin. Check them out, and we'll see you guys next week.
See you next week.